think one of the main conclusions is that digital trade policy is quite misunderstood. And when it comes to digital trade provisions in free trade agreements and the commercial impact they can have for firms in the financial services sector, many people want them to be unlocking new market access, to be opening new opportunities. But that's not what they're really designed to do. What they're designed to do is ensure that existing levels of access are maintained, that firms continue to not be forced to localise data as a condition of market access, that duties are not levied on data transmissions. So when you look at these trade agreements, the question you need to ask yourself is, do they achieve this? Do they constrain the ability of regulators and policymakers to make market access for firms, financial services firms, more stringent in future? And the answer is not really, but with a caveat, not really unless the regulator and policymakers want them to, because policymakers will always be able to rely on national security justifications to restrict access, or rely on public policy imperatives such as privacy to restrict access, or rely on prudential measures to ensure financial stability. So the solution here is to involve regulators in the negotiation of free trade agreements right from the beginning, to make sure they're consulted, that they're involved in setting the mandate, and that they are tasked with the implementation. It's also key that there is a high degree of transparency. Alongside the free trade agreements themselves, we should have great memorandums of understanding that allow regulators to get together and decide what specific terms mean, so that they can determine when and if it is appropriate to intervene and restrict access under certain conditions. They should also be transparent about which measures and regulatory procedures in place already breach the terms of the free trade agreement and why. Firms should also have the opportunity to challenge countries party to free trade agreements if they're in breach of their obligations, and have a response and a justification as to why those measures have been taken. And finally, the UK and other countries as well really do need to prioritise the free flow of personal data, whether this is via multilateral agreement or via bilateral adequacy agreement. This is key for the financial services sector, because the personal data regime and the financial data regime are increasingly intertwined.